is nice.
Right, this is a slight change in approach. I hope it works. We'll see. Hopefully you'll hear us. This is the final session before the break.
All right, we'll be quick.
Yeah, Louis is representing Consillion. I don't know if everybody knows Consillion. I think banking automation used to be a partner of this conference for many years, and Sprintquip acquired banking automation a few years ago, and then the rebrand is now Consillion. Is that basically
well done.
How we ended up?
That's us. Yep.
Okay, very good.
Sitting next door if you want to learn a little more.
Yeah, exactly right. The big booth in the central.
So Sprintquip acquired banking automation, as you say, a loyal sponsor of the program for a long time. And as an Australian group of businesses, we chose to rebrand and rename to reflect a little more of the sort of common goals of the group. And I've come from Sydney to head up the business here. I'm pretty excited about the opportunity. You talk about a fireside chat. I think in fairness, I'm in the hot seat because I've been in the job 10 days. So bear with me, and I'm here to learn a little from each of you. But you've got a few questions you want to fire at me. So
I think a lot of the questions I have for you they relate not just to the old business, but actually to your business as a global business. And I know you've got a lot of experience in the industry, your current employer and in former employers as well. So I think I hope it'll be relevant to the audience. I mean, I said in my introduction, and we've heard this morning, this conference is both a mix of traditional self-service and sort of digital banking, and that some of the challenges that presents, but that's also a challenge for you in your business. I mean, you come traditionally from the sort of the self-service, the ATM side of things, and I'm wondering how you seeing you work with banks all around the world, not just here in the UK or in Europe, but actually in Asia and all around the world. How are you seeing banks dealing with this challenge of needing to as we heard in the last presentation, needing to rationalize networks, both branch networks, but also ATM networks, but also maintain, access to cash and the sort of parts of society and the economy that still sort of are traditional in that way. How are you seeing banks dealing with that?
So that's a great question. What we're seeing, I think, and it's a little generic because it's going to be very different by geography. But you heard from Bank of Ireland, 30% network change. You heard Batapan saying that they needed to reorganise the ATM network, and the branch networks that they have will follow. It's not a UK phenomenon, is it? It's not just here. I've seen it around the world in any mature banking market. I think it's pretty clear we're over-bank branched in the mature segments. With the advent of digital, the digital natives being able to adopt lots of payment methods, the people that are left behind are the likes of my lovely mother, right? 92-year-old living in Sussex. She only understands cash and cheques. And I was told when I entered the banking segment 35 years ago that cheques were dead. But my mother still kind of thinks that they're as good as gold and writes them out. She doesn't understand cards. She doesn't have a smartphone. So what we're going to see, I think, is banks reorganising their networks pretty quickly. It's not if, it's more of when and how it's going to happen. We've had a few of the Australian banks announce 50% plans to reduce 50% of their existing footprint. I liked some of the earlier messages about what the pandemic has done to this, right? Mm-hmm. Because the pandemic has helped them close. We had issues of branch staff being away, couldn't open a branch. Sorry, the branch is closed this week. And so consumers are starting to see that. We also, of course, saw a distinct lack of foot traffic when we were all in lockdown. So again, branches experienced no activity. So I think we're starting to see, and that was a bit of a message for some of our banks to understand what that change is going to do and how consumers may react. And then we're seeing other footprints, right? So we're seeing what the alternatives. And John, Bank of Ireland, mentioned he's using Post to continue to deliver the services. Batapan, as a shared service, is looking to work out how to continue the cash. So for the people that still need it, we're going to see a dramatic shift in branch volumes, but we're going to see some form of access. And the regulators here in the Queen's speech, of course, was an indication of we're serious about it.
Yeah, it's interesting, this question of regulation, I think, and it was referred to earlier, I think that in the Bank of Ireland presentation, that I think Ireland's trying to get on top of this before you get a situation like you maybe got in the UK or possibly even in Australia, where arguably things have gone a little bit too far and things are having to try and be rebalanced. So yeah, that would be interesting to watch, and it'd be interesting to see whether other countries do get a little bit ahead of that.
And it's going to be very different by country. I've already seen, I do lots of work in Asia. have come from Australia and New Zealand, and where they are, what the regulator's view is, and how much outcry there is tends to impact the whole behaviour, and I'm learning about new regs coming here.
Very good. Let's change to a different question. We're going to, after this session, go to a break next door. You've got a booth there we mentioned. I was in there earlier, and you've got this slightly controversial tagline on your booth, "Not another ATM." I was just wondering if you could explain what you mean by that.
I blame the marketing team for this one. But quite honestly, the solutions that we offer are designed really for the commercial side of your business. So small, medium enterprise, business banks, our services are designed to allow those entities to continue to transact, right? So self-service designed for business bank customers. So we kind of feel that the ATM, bless it, at 50 years old is in decline with transaction volumes, and we heard that in the earlier speeches. What we're seeing at the moment is an uptake in both number of machines and volumes of transactions in what we're offering, as businesses struggle with, as we like to talk about, less cash, not cashless. And so CIT pickups become less economic, so you can deposit, your takings into a secure environment, and that's what our solutions are designed to do.
Okay, very good. We heard a lot about banks this morning, but there are other players in the industry. For example, the cash in transit firms. I think we know who they are. People like Prosegeorgi for us and Brinks and people like that. Yep. We're seeing more involvement of those sorts of companies in the industry. Is that something you're seeing? How do you see the role of those sorts of firms going forward?
Yeah, it's a good thought. I mean, as we're all looking for getting out of bricks and mortar and finding those to substitute us, we work quite closely with a lot of the CITs today because we provide note counters, coin sorters, technology for their back office processing. And that gives us great insight as to the declining volume, right? Their traditional business, as we're talking less cash, is being quite impacted. They all grew up based on volume. It was all a volume game for them. So we're seeing that they need to reinvent themselves. And what we're seeing, and we're working with a number of them around how they can reinvent themselves to something more applicable to the changing environment. So what we're seeing is on-site vaults, drops, smart safes being deployed by CITs. We're seeing recyclers to allow for float dispense and the recycling of on-premise cash. And we're also seeing self-service tools such as our own. But I think the most innovative of the CITs, and I've done some work with a couple of them specifically in transactional hubs. Right? They see themselves, we have white labelled ATMs in this country. We see white labelled branches or transaction hubs being managed by a third party rather than the bank. So that is your leave behind, I think. And we've got multiple terminologies for the same thing, but in essence, I see the CITs have got a great role to play in that if they can adopt and change sufficiently and be more tech savvy.
Is it only CIT companies that could do that? I mean, you could sort of imagine independent ATM deployers, for example, another group that we have here in the UK, and you have in Australia as well.
Yep, absolutely. As they see decline in their traditional business, it will be the same thing. They'll look to see, is there a role for them to play? And I think what's going to happen is, certainly in my market in Australia, the Australian Post vehicle is one that already, is being anchored as your point for cash and point for service. The challenge is it's not a great consumer experience, if I'm polite. Queuing and waiting and standing behind somebody buying an envelope or a stamp, as they still occasionally do. So it's not the greatest experience. So if I was a bank and I've spent years investing in my brand and my value, to send somebody there to transact may not be the best move, and therefore there's room for others. What they look like, time will tell. There's been a number of trials already. And I think this sort of shared service model is going to come. I think we're going to see multiple banks sharing a single outlet.
Yeah, I think that's probably right. I mean, I think we're seeing, I think that these shared hubs that you're talking about, also pooling that we talked about in the last presentation, they're things that we get asked about a lot, and I think we'll get more and more examples over the next few years of both of those. Especially
where there's no real differentiation. If it's just a transaction and you can't win a customer or offer a good service, offer cards, it's just the fulfillment, as we call it in our business. It's a transaction fulfillment where you need a physical something. I think it'll be a shared service where we can drive cost out. Can I
revert back to the digital banking side of things?
Yeah.
And I want to talk first about consumers and then maybe about business banking, but on the consumer side, there is still this challenge about how do you integrate cash into a sort of multi-channel banking environment. Can you just talk about that a little bit more?
This might be the fireside chat that gets a bit warm because I'm not sure this is my area forte, but what we've done with our solutions is we realise we've got to continue to offer the ability to drop money, deposit money, get change. But what we need to do is also make our solutions to be able to get as close to the digital world as possible. Again, digital, you cannot do a cash fulfillment. I can pay you P2P, but I can't give you the physical something or deposit the physical something. So the fulfillment part we specialise in. And what I see is things like pre-staging of transactions, e-receipts, change order requests. All those things can be done digitally, but fulfilled at a self-service device in one of these hubs. And we've been trialling and piloting with a lot of parties on what these hubs will look like, so that they can measure the effectiveness and the usage and so on. But the digital part will help them make it a bit more sticky, I think. So we incorporate it in our devices, and that way, we can start people on that journey. Because what we've got is we've got the laggards. We've got those that don't really want to be involved in the digital world, and what we've got to do is gradually take them down the path. So we incorporated what we offer to make sure that it can be brought in at the right time.
It seems like the locations for the provision of cash, I mean, the fulfillment part that you described, there's quite a lot of different options now emerging. You've got the traditional bank locations. We heard in the Belgian example in the last presentation that they're all moving to off-site locations. You've been talking about banking hubs here. We haven't talked much about retail locations, but I think retail could play a role. How do you see that sort of mix evolving? I mean,
I think early on we saw quite a power struggle between retail and banks, right? We see Sainsbury's Bank and Tesco's Bank, and in my case down under, Woolworths, want to get a banking license and so on. So the challenge is, if I transact there but run the risk of losing my customer, I'm less inclined to want to partner with you to use that as a hub. But clearly, there's enough retail outlets, right? Now, even retail are going through the same thing. Click and collect through the pandemic has shown, the couriers are booming, and retail outlets are falling in footfall, right? There's a lot less foot traffic going on. So they're going to have space, but they're also going to rationalise. So providing they're not seen as a competitor, the independent white-labelled hub tends to be, brand agnostic, let's go and use it. Going to a specific destination has a few more challenges, I think. If I was, I'm allowed to say Barclays or one of the banks here, if I was one of those banks going, go and transact there, only to find that I'm leaking customers to Tesco's, it wouldn't be such a great experience.
Okay. Just lastly, because I'm watching the clock on our screen in front of us here.
Oh, yeah, it is.
I mentioned business banking, and I think one of the groups that are getting squeezed by some of the reductions in branch numbers that we're seeing is our business customers, because unless you're a completely cash-free business, you actually have to deal with cash. Can you talk a bit about that and how you see sort of services for business banking customers evolving over time?
Yeah, so I think really, if you think about the future of this stuff, there's kind of two major dynamics. What we've got is the forces in play are, as a retail, hospitality, service-based business, if I refuse to offer cash as a service to my consumers, I'm going to alienate a segment of the market, and I have to make that as a decision, right? Because there's a cost to manage it. I've got to make a decision. Do I let it go, or do I keep it going? So that's the first case. The second case is, as a bank, if I don't make it easy for retailers that are still allowing cash to manage their cash in and out, if I don't make it easy, I risk alienating them. So it's there's these two forces in play of, again, our view is very much will be a less cash environment, not a cashless environment. So the idea is the adopters that want cash, that want to keep their customer whole, or indeed their service, tends to attract, that demographic. They need to be serviced, and the bank that best service them in an automated way will be the ones that, retain and keep things whole. So I think that dynamic is at play here, and we're going to work out, who it is and where it is. A couple of discussions I've had with bankers tell me that some of their most profitable customer segments is the SME and the business bank. Right. So alienating them and losing the rest of their services just because you didn't manage the cash component for them, will be a challenge.
I guess that's because some of those smaller and mid-sized retailers don't necessarily have the same option. You talked about on-site storage, recycling, that sort of thing. I guess that's not really viable for some of these smaller merchants, and yet they still, unless they've gone cashless, still have to deal with that cash.
Absolutely.
And they don't want to necessarily travel large distances to do that. So that's where the competition element of the banks comes in. We are pretty much out of time. What I'm going to suggest is that if anybody has any further questions for Louis, that he goes to the booth next door. But Louis, thank you very much. And it's been a pleasure talking to you. And please enjoy the break, and we'll see you in about 40 minutes' time. Thank you very much. Thanks a lot.
Thank you.